Welcome to the Trading Lounge and the Commodities Report. And just starting off on the US dollar here, not going into a lot of detail, but we're still looking at Wave 1, Wave 2, and Wave 3 to the upside through here, up into the 81 area through here. We can see that with all trends, they have a beginning, a middle, and an end. And in this trend through here, the strong part here, the third of the third wave, is the center of the trend. So normally the beginning here looks a little bit like the end of the trend as well. So I can see here we've got 1s and 2s, 1 and 2, and 1 and 2. So they got to play out as 3, 4, and 5, 3, 4, and 5. So it's still got further to go to the upside. We're looking at this as a little pullback into wave 4 here, and further to go up here. So there will be continued pressure on commodities as such. Alrighty, so starting on gold here, everything's going pretty much according to plan. So just on the daily chart here, we are looking at the wave A here, wave B over to here, and wave C over to here. In wave B here, wave B is always in 3 waves, so we're looking for wave A, B, and C. And yeah, so we've got wave A down that's complete, and now we've got wave B here that's likely to be completed now, and we're looking at wave C down here. And wave C mostly has 5 waves in it, except in a triangle where it'll have 3 waves. So we're looking for 5 waves down, and we're looking at a 61.8 retracement level from this high to this low to this high here, which brings us down to around the 1280, 1272. But of course, psychologically and volume support over here is playing a strong part. So we can't expect it to, pull back that far, but let's see how we go. So just drilling into here somewhat. Yeah, so the wave A down here was very clean and clear, and it's also in 5 waves down through here. So if we get 5 waves in the opposite direction of the trend up, that means we'll get 5 waves moving down here further. So that's where we are now, and it's possible that we are in wave 1, 2, 3, 4, and 5 as such here. That's the pattern that we're looking at the moment. However, trading in corrective patterns like this here can be a little bit tricky. Normally when you have a very simple wave here, nice and clean and simple, there's the rule of alternation. Most people know the alternation guideline in waves 2 and 4. If wave 2 is simple, then wave 4 will be complex. And that's the same in corrections as well. So if wave A is simple, wave B can end up being complex, and wave C could be more complex or more simple. So yeah, we need to bear that in mind. But as it stands, we're looking at, let's drill in a little bit further through here. We're looking at this particular pattern through here. So we were looking for, yeah, look, just the wave B done and dusted, then wave 1, 2, 3, 4, and 5 down into the 50%, 61.8%, the lower end of the circle here. Yeah, so look, in shorting this, you'd want the 1310, the closest largest number, being the retested resistance, and you'd certainly want to be pulling out at 1300 here, because there will be support in this area through here. Right, so just taking a closer look at this here, this move up here was a 61.8 retracement level. So was this one down here compared to this move up through here. The move up through here, the 61.8 retracement level was 317. It went into 318 here from this distance here. So yeah, this little move down through here, we'll see we're looking for wave 2, we're looking for wave 3 here. So in wave 3, there'll be 5 waves. So we've got wave 1 here already. Going back for wave 2, the 61.8 retracement level from top of wave 2 down to wave 1 here will be 315. If I can just drill in there a little bit further. Okay, just drilling right in here now. So yeah, look, while we're here, this move up here for wave 2 was really neat and tidy in terms of the A wave, the B wave, and then 1, 2, 3, 4, and 5 for the C wave of 2, with our target at, I said 315, I've made an error, but the 61.8 was 1317. still. So this move down through here counts as 5 waves. So we're looking for an A and a B and a C wave back up close to the 13-15 area through here, and then we'll see wave 3 to the downside. So basically down for 1, A, B, and C back here, and then wave 3 down somewhere in this area through here. Wave 3, wave 4, wave 5 to make wave 3 here with me. So yeah, so we've got 4 and 5. So that's what we're looking at. So if you're shorting it, it'll be nice to be under this 13.10 here. You may already have shorts in there. That's fine. You'll need to keep the stop above the 13.18 here. And you could possibly look to enter again short. But once this here, this A, B, and C is done and dusted, look for 13.12, the pivot within group 1. Group 1 is always 1, 2, and 3. So once the number 2 here, the pivot within group 1 becomes a retested resistance, then you know that it's going to be pulled down further from that point there. Alrighty, so silver's much the same as well. So moving on to silver here, this is just on the 4-hour chart. The target area is down back at the major trading level 2 here, the 2,000 or $20 in full contracts, and we're looking for an A wave, a B wave, and a C wave down through here in 5 waves. So we've got the 1, the 2, and 3, 4, and 5 here, and just drilling into that further here, we've got this here. So yesterday we were looking for a retracement back here as wave 2, so that's come into play. You may already be short, that's fine, keep the stop above this wave 2 here, and then on a smaller frame here we're going into wave 3 here. That's wave 4, that's not what we want. Wave 3 has disappeared, no, there it is. Let's get my little claws onto it, there we go. So yeah, look, expecting a retest back into the 2100 here again. So you could allow that to go back to the 2100 and then look for 1290 as the retested resistance to short that. Of course, you could get in there closer there as well. This trend line may have some significance, but the 61.8 retracement level comes back in around the 2100 there. So that's all pretty much a few points meeting there, which gives it a bit more strength. So continue to short this market as such. And the copper market, yeah, so this 5 waves we've got up here is basically this 5 here, okay, that's just an old drawing, and we're looking for an A and a B and a C here, and we've got the move down here as the A wave, and we're looking for the B wave up through here. That can pull back up to, I think it was 3, 2, 3 sort of area here. So we're looking for that rally. It's kind of starting. I'll just come back to this one here a bit. No, can't do that. Okay, this is a bit better. So look, what we're looking for here on the 2-hour chart for the wave A down here with the 1, the 2, the 3, the 4, and the 5. So we're looking for a 50, 61.8 retracement level here. May not get it. It doesn't really bother us too much. We're not trading this here. If gold is going to be moving down, then copper could be following it as well. It has been lagging in its, following precious metals as such. So it's lagging. So we may see a move up through here, but there is a lot of resistance here at the 320 and this block here as well. So we just need to be a bit careful on how far this could actually go here, because it could fail. If the 318 became the retested resistance, then you know that it's to the downside at that point. But basically we're looking for the A wave down, the B wave, and then the C wave down as well, so down further through over here. So yeah, the little chart that I just had then, not that one, but this one here. So it is possible that we've got this A, B, and C here. So I've just labelled it as wave A here, then, sorry, that should be wave C there, of course, blue wave C, and label it as wave A here. So we could still have wave B here and then wave C up, which would be the right sort of proportion and ratios and all that lark. So we're still looking, but because this is corrective, it could fail from here, and that's why I was suggesting the 318 is a retested resistance. Not before that, it has to get stuck under there. and the trend line and so forth, then you know that it'll probably go lower. But as it stands, our primary count is wave A up here, wave B back to here, and maybe not all the way back, but then wave C up through here. There'll be some relationship in the distance of wave C and wave A here. So 4 points to the upside. So this would pull back into this area here. That will be pretty well right for the 323 mark in around here somewhere. So let's just see how that goes. I mean, this is important because it will support the material sector, globally, material sector. So the base metals were up last night. So even though US markets were down, indices were down, we're expecting that, but base metals were up. So we know that base metals in commodity countries are leading the charge. The banks are being a bit lazy, really, but they've been moving up pretty much based on low funding rates as such from overseas. Okay, the oil market, the bigger picture here first, we've got this this pattern's interesting because it reminds me of the Dow Jones when it was up at 13,000. But right, so look, in a bit of a nutshell here, just keeping it sort of simple, we're looking at this here being down for wave 1, back for wave 2 here, and then wave 3 down to here in 5 waves, and then wave 4 and wave 5. So I could move these over into their respected places as such, and that would make wave C, intermediate wave C of primary B here. So we're looking at that there. So in this wave 2 to wave 3 here, it appears that we're down for wave 1 here, and we're moving back for wave 2. So we're going to drill in and have a look at that. Our main trade here is finding the top of wave 2 to start shorting through here. So we'd want to build some trades above the 100, but keeping them very small and accommodating that risk, and then adding once we're under the 100, because it'll be a safer bet under the 100 as a retested resistance, because in reality at the moment, the 100 is the support and we need it as resistance here. So with that in mind and understanding that risk, if we move those, this is where we are. So on the daily chart, we're looking for wave 1 down through to here, and which is the 5 waves here, and then we're looking for an A and a B and a C for wave 2 here. Now it's possible that wave 2 here and B here can already be in place here on this trend line here that's being retested here quite nicely through here to here, and that's normally the case. So it'll be interesting to see, and we'll need to come up with some plans to navigate this. But yes, this wave 2 here can be in place just here. We need to look at that here. So when I say wave 2 can be in place here, my original count was up for wave A, then back for B, and then up for wave C here. That could probably move a little bit high, but this was basically the 61.8 retracement level from this high here. So we've really already pretty much met that situation, the 50-60% retracement level, and this does count. It can be counted as 3 waves here. So it's possible that we could have this in here as the A, the B, and the C wave already in here, with wave 2 being here, and then we would be looking at this. Let's get my drawing tool here. As this down for 1 here, back for 2, pulling back 61.8%, down for 3, 4, and 5, down for the 3rd wave. Do you know? So what we need to do here is we need to be, we basically want, as I mentioned, we want to build some short trades into this section here, but keeping them very small and looking to add to those trades over this side here. So these trades could be, if you normally trade, let's say 5 contracts, well then you just put in, 1 contract up here, 1 here, and 1 here, so to speak. So keeping it very small and then building it up on this side. So with that in mind, just drilling in here a little bit further, if wave 2 is in place over here, and this is down for wave 1, and we got back for wave 2 here, then I think one of the safer places to go short is the 102, the pivot within group 1, 2, and 3 here. If this 102 becomes the retested resistance. Okay. So I think that would be a pretty safe bet on the first thing here. Oh, this has moved up rather quickly. So the current move down through here in the 61.8 retracement level is 103, and also covering this gap here as well, which I was thinking of this morning when I'd seen it down here. So look, we could short it from up here. Let's just give it another session to work out through here. Let's see if we get weakness in here. We may be able to get a shorter trade over here somewhere. Yeah, look, anyway, we're getting close. Just can't nail the little sucker down just yet. So, but if in the meantime, if 102 becomes a retested resistance, then get a short position from there and keep the stop well away up through here or above here at least. You know, keep it out the way for the time being, because we are in a corrective pattern. We know that, you know, on the daily chart, all this move up here is sending the market into an overbought situation. We just need some evidence of a move down. So we'll come back to this one. It's going to be good. The soybean market, not a lot of change in this particular market here on the daily chart. We're looking for 5 waves down, the 1, 2, and the third wave down here. And in this third wave down here, we've been counting 5 waves within that structure. And we think we've got it nailed here, and the wave 4 retracement level should pull back to the wave 4 of 1 lesser degree, which is in here. But it's really struggling to do that. It's struggling to get up. You can see that it spent all these days here under the 1200 and not making an effort to go up. It's not that that I'm giving up on it, and I'll stay with it while the number 1172, the subgroup 2, is the support for this market. We have to consider that situation here as, I mean, I've got it labeled A and B and C here. Probably may be the case, but I think we also need to take into consideration that all of this is just the A wave, and we're looking for a B wave back here and a C wave over here and wave 4 over here, something a little bit bigger, and, you know, something to compensate this, you know, this whole move through here. This is just too small at this stage. Mind you, all the corrections have been very small, so we need to take that on board as well. But this is the 4th wave of 1 lesser degree here, and so that's where we should be looking for this market to come back to. But, you know, it's got to be on top of that 1200. So it's got support here at the moment. This is how I've sort of got it labeled, basically an A and a B and a C here for the A wave, then 3 waves back for the B wave, and then up for the C wave. Look, I just don't know. It doesn't really matter at this point. If you do see weakness and you want to short it, then the 1172 as a retested resistance is what you need. It needs to be tested. Yes, the momentum of this market is still to the downside. There's no denying that. It is in an oversold situation as well. So that's why we're kind of looking for it to move back. And this particular wave count here fits quite nicely at this stage, and we just need to see how it goes. So there's nothing really here at the moment for that. The wheat market, we were looking at, we've been short in this market, and yeah, I was looking for a move down. We've also short it from the 550 area as well. I think that we need to cover it in here. I've brought the stop down to 547. But one of the main points here is that we're close to the 500. Okay, so there's going to be bigger orders there, going to be profit taking there and so forth, short covering and yada, yada, yada. And also, too, coming into group 1 here, 10, 20, and 30, if you know group 1 and what it does, you know that it's like a filter and it'll slow the market down. And there's evidence of that with this move back into the next level here from 3 to 5. So we are looking for wave 5 here. And we would expect this low to be taken out here. So we would be looking for down for 1, back for 2, down for 3, 4, and 5. We'd be looking for something like that. However, technically, all it needs to do is make a new, well, it doesn't even have to make a new low here, technically. All it needs to do really is have 5 waves here, which are present at this stage here. So I think at minimum, we should be taking 50% of the money here. And from here, there does appear to be a 5-wave structure here. So it can pull back to the 50-60% retracement level to the 540 area here. So normally I'd bring the stop down to 543, but it's just a little bit too sort of close here. That's why I put it at 47. But I do think you need to start scaling out from this situation here. We'll just allow this to do its thing here. We know that in the bigger picture that we are looking for a low in this area, anywhere from here down to sort of 472 area through here. And sure, it'll take, you know, a few weeks to play out and all the rest of it, but I think that that's what we need to do with this market now. The corn market, we're looking to short this at 372 again. You know, I've readjusted this wave count here as well. So coming from the 450 here as 1 and 2, and then all of this here being the third wave down to here. Okay, so I had the third wave here before, but I think it's here, and we would be looking for this being a little fourth wave here. This is down for the fifth here, and then back to the fourth here, and then down for the fifth here. Not that it's going to go fast, because we've had the extension in wave 3 here. That means that this fifth wave here will be roughly the same size as wave 1 here. So basically 20 points, which is, you know, we're going to see a series. This little wave 4 coming in here is a signal that the market is slowing down. So 3, 4, 5, 4, 5. So, you know, we could probably see a rally from this area through here. I'm mindful though, if the 350 became the retested resistance, then we would look down at the 300, but I don't think we should do that and get high on ourselves just yet about that. So I think that we just need to work through here. So if you're short here, I think you need to really put a close stop in here, or take profit into the 360 area here, because I think this is going to be retested through here. But taking the next logical step would be putting a stop at 373.75 here, just above the 72 number here. Rightio, the coffee. Right. It's not an easy wave count to count here, but the best fit that I can see is from the top here on the daily all the way down here for wave 5 and making it the A wave here. Then an A wave, excuse me, B wave in 3. This is in 3 waves here. And then we'll look for 5 waves here for the C wave to make wave B here, and then wave C down. Now, as you can see at 17190, we've got a daily trend line resistance here. Not only that, we've got 172 there as well. So the 172 here, 72 number, you know, it's important here. It's number 72. It's what all this market's sitting on through here. So it's a balance point. So look, nothing cooking here. We could do a short from the 180 here, but we need to see this 5 waves up here completed, and then we need to see a little impulse wave down through here. So let's just leave this market for the time being, and we'll look to short this market up around the 180 there if we get evidence of an impulse wave coming down this side of the market. On the daily chart, the market is being overbought in coming up here just in these 3 days here. It's really, you know, it's really sort of becoming overbought real quick. So I think we're definitely on the right track there. The sugar market on the daily chart here, just looking at this here. This is the best fit that I've got here as well, but the move up from this low here up to this high here and the 61.8 retracement level comes in on the bottom of this circle here. We are starting to see some support. Well, we have been observing support come in. We've been counting our little 5 waves down through to here. Now, what I don't know is this. I think that this could be the A wave to here, a B wave to here, in orange here, and then the C wave up through to here. And if that's the case, then we'll get 5 waves up here in terms of this C wave here up to the 20 here. So I think that that's the case. But the flip side to all of this is because we've got 5 waves down through to here, we can also get an A and a B and a C wave back to the 61.8 retracement level back at the 18, and then it can fail from here and move down from here. So we can start trading it long up through here. We're going to either get it corrective or we're going to get it impulsive. So my suggestion is that any positions that are taken in this space here and in the initial space need to be kept very small, and we need to keep the stops away from it. And as it develops, then we need to look at, how it's developing, and is the move up corrective in terms of an A, B, C, or are we going to get impulse waves to the upside? So that's what we need to work out. The first step in getting a position here, we're going to use the weekly robo, and that would have triggered a position in at 17.19, but I didn't mention that and I didn't want to do that. But what I do want to do is look for a long position if we get 17.30. If we get a tested support on 17.30 here, then we'll get a very small position, even if it's just one contract, and then we'll put the stop at 16.96 or 16.93 is probably better, but just under the 17 here. No, 96 is fine, and that would be under the weekly low for the robo method, the weekly robo method. And let's just see if we can climb up through here. You need to get more than one contract. We're not talking about corn or wheat here. Tested support on 17.30. A very small position, like a quarter of a normal position that you would normally get. We need to sort of build into this as it moves up through here, if this is the case. But it must have tested support on this 17.30 here. So it doesn't have to be perfect, but yeah. And this is a high risk as well, this trade. So bear that in mind as well. The orange juice market is falling into place. What we've been looking for through here is we've been looking down for wave 3 here. We've been looking for wave 4 and then down for wave 5. In wave 4 here, we've been working through the A wave here, the B wave here, and then the C wave up through here in 5 waves. Now, it's not easy to count this 5-wave sequence up here. All we can do is just sort of have a bit of a shot at it. It's in our sort of area up here, and we're looking at this as probably being the 4th wave here across the 150 area here support, and then we're looking for wave 5 up here, which will also have 5 little waves in it as well. Now it can move a little bit higher. Let's just have a look at that, and we'll look at that in a moment. But basically, once wave 4 is in, we'll be looking for wave 5 to move down and take this low out here. We're not expecting it to go a long way down. 144, 143 sort of area is our target area here. So there is a bit of a short trade here. In a bit of a nutshell, the safe trade and the normal process is looking for 150 is the retested resistance to short. From that point, then you know that the sellers are on your side, on the short side. So shorting above here is definitely high risk. But let's look at a way to do that. So I'll just change this into this, make it a little bit better here. Now, so this is wave C moving up through here that we're looking at. Now, it's possible that this can move from here, one more little move up through here if we're looking at this as 1 and 2 and 3 and 4 and 5 here. So it can move up to 153.50, 154. Look, it doesn't really matter, but if this market eventually comes down and finds the pivot within group 1, 1, 2, and 3 here as resistance here, and you can see that it can't get up like it's doing that, so to speak, but upside down, finds that as resistance here, then you can get a small position here. You can get a small position when 151 becomes resistance, and when 150 becomes resistance as well, you can get a small position there. So we can build up 3 positions in there. And look, we could probably get another one at 149 as well to the downside. But don't jump the gun, and it's important that this 152 becomes the retested resistance, because that's a signal that it's moving back to the downside. Okay. Right, that's it. Okay. Thanks for listening.